This may surprise you. The area with the strongest pressure on available property was also the slowest place to secure a buyer. Troon agreed more sales than the number of new homes coming to the market during June, but it also had the longest average selling time based in Ayr, Prestwick and Troon. Meanwhile, Ayr became the fastest moving of the three areas, despite agreeing fewer sales than it did in May. And Prestwick probably produced the strongest all-round improvement of the month. So these three areas sit only a few miles apart. They're not behaving like one identical market. In this July property market update, I'm looking at Rightmove Plus data collected during June 2026 for Ayr's KA8 postcode, Prestwick's KA9 area and Troon's KA10 market. I'll compare the figures with May 2026 and June this time last year. We look at what changed in each area, what the figures mean for sellers, the wider market position, the landlord, the latest mortgage update, and this month's landlord desk. And importantly, I'll explain why low stock doesn't automatically guarantee a quick sale if you're a seller. So which market was strongest? Let's have a look. Ayr had 45 properties available during June. There were 24 new instructions, 20 sales agreed, and an average selling time of 54 days, which is really fast. Prestwick has the greatest amount of stock available, with 67 units available across June. Prestwick recorded 31 new instructions, 29 agreed sales, and an average selling time of 67 days. Troon had the lowest available stock for the month, with only 44 properties. There were just 19 new instructions, but 27 sales agreed. So sales agreed, as I mentioned, outstripping new products coming to the market. This average selling time, however, was the longest of the three areas at 77 days. So which market is strongest? There's not one simple answer. Ayr was the fastest moving market. Prestwick showed the clearest month-on-month improvement, and Troon had the tightest relationship between new supply and sales agreed. But Troon was also the slowest moving market based on the average number of days it took to secure a buyer. That is why I'd be very wary of declaring one outright winner. Each location gives sellers a different potential advantage and presented a different risk. Ayr was the fastest moving of the three markets during June, but that does not mean everything in Ayr suddenly became easier to sell. The average selling time fell from 68 days in May to 54 days in June. That was also 13 days faster than in June last year. However, only 20 sales were agreed. That was down from 26 in May and 28 in June. So the properties that successfully found buyers appeared to have done so more quickly, but fewer properties secured a sale overall. Available stock remained extremely limited. There were 45 properties available compared with 46 in May and 73 in June last year. That means that buyers had around 38% less choice than they had at the same point in 2025. New instructions recovered from May's unusually low figure of 14 and reached 24 in June. That monthly increase looks substantial, but June's total was almost identical to the 25 new instructions in June last year. For Ayr sellers, the opportunity is clear. You are competing against far fewer available properties than you would have been a year ago. But buyers are not automatically choosing every home that reaches the market. 24 new properties came into the market while only 20 sales were agreed. Pricing and the strength of the initial launch therefore remain important, even within a low stock market. Prestwick probably produced the strongest all-round improvement during June. Sales agreed increased from 25 in May to 29. At the same time, average selling fell from 80 days to 67. So more properties found buyers, and they did so more quickly. There were 31 new instructions during June, compared with 35 in May. That meant Prestwick agreed 29 sales against 31 new listings, much tighter market. In other words, buyer activity came close to matching the amount of fresh stock entering the market. Available stock increased slightly from 61 to 67 properties, but that needs to be viewed against the longer term comparison. There were 111 properties available in June last year. Prestwick therefore had almost 40% less available stock than it did 12 months ago. That is a major reduction in buyer choice. However, we should not overstate the strength of the market. Both instructions and sale agreed remained below their June 25 levels. So Prestwick improved considerably from May, but overall transaction activity has not fully returned to where it was this time last year. For sellers, the balance appears more encouraging than it did a month ago, but limited supply of homes does not mean that buyers have stopped comparing value. They're still looking carefully at condition, location, home report findings, and the competition available within the same price range. Troon agreed 27 sales during June, but only 19 new properties came onto the market. That means 8 more homes went under offer than entered the market. If that continues, the choice available to buyers is likely to tighten further. But there is an important warning hidden within the figures. Despite that shortage, the average selling time was 77 days, the longest of Ayr, Prestwick and Troon. Available stock fell sharply from 57 properties in May to only 44 in June. That was also down from 60 in June last year. New instructions fell from 30 to 19, while agreed sales reduced more modestly from 32 to 27. Sales agreed were actually one higher than in June 2025. So there is clear evidence of buyers acting in Troon, particularly when suitable homes become available. However, we need to understand Troon's property mix. KE10 includes mainstream family homes, but it can also include higher value coastal properties, larger homes, retirement developments, premium flats, and more specialist properties. Those homes may naturally take longer to match with the correct buyer. That may partly explain why Troon can have both limited supply and a longer average selling time. For a Troon seller, scarcity is helpful, but it is not a substitute for a realistic selling strategy. The stronger the asking price, the more important it becomes to understand exactly who the likely buyer is and how the property should be positioned to reach them. Across Ayr, Prestwick and Troon, there were 156 properties available during June. That was down from 164 in May and 244 in June last year. Combined available stock was therefore around 36% lower than it was 12 months ago. There were 74 new instructions compared with 79 in May and 104 in June 2025. A total of 76 sales were agreed, down from 83 in May and 90 last year. So the overall market was slightly quieter in terms of activity. However, sales agreed still marginally exceeded the number of new instructions across the 3 areas. That suggests buyers are continuing to absorb a meaningful amount of the new stock, but they are not doing so evenly across every postcode or every type of property. And that brings me to another important point. Rightmove Plus data gives us a very useful overview, but it does not tell us everything. It does not automatically separate a one-bedroom flat from a large coastal home. It doesn't explain whether a property has significant home report issues or whether it's brand new condition. It does not tell us whether a home was launched at an ambitious price and later reduced. And an average selling time can be influenced by a relatively small number of older listings. And as I've touched on in other reports, new build stock can be taken as a factor for average selling times as well. The statistics show the general direction of travel. They still need to be combined with local knowledge, current competition, and the individual property. That'll have its own story to tell, and that's important. One of the most dangerous assumptions a seller can make is this: there aren't many properties available, so mine will sell anyway. Troon had only 44 available properties during June. It agreed more sales than it's received new instruction, and yet the average selling time was still 77 days. Low stock creates an opportunity. It does not guarantee a result. The individual property still needs to make sense to the buyer. That includes the price, condition, home report, photographs, marketing, viewing experience, and the way the property compares with the alternatives. The first couple of weeks on the market are particularly valuable. That is when the listing is new, buyers receive their alerts, and the interest should be at its strongest. If the property launches too high and receives limited activity, reducing the price several weeks later does not create that first impression. A successful launch should be planned before a property appears online. Who is the likely buyer? What else can they purchase at the same budget? What might concern them in the home report? What are the strongest features we need to demonstrate? And what is the asking price strategy? And what is most likely to create genuine competition? Limited stock helps, but it's launch strategy that turns limited competition into viewings, offers, and a completed sale. A mortgage agreement in principle from several months ago should not be treated as proof of what a buyer can borrow today. Products change, rates change, personal circumstances change, the economy changes, and the bank's affordability decision can and certainly will change. The Bank of England held the bank base rate at 3.75% during its June meeting. The decision was made by 7 votes to 2, with 2 members preferring to increase to 4%. That is worth noting. The next bank rate announcement is due on the 30th of July, end of this month. That vote, the one behind us, shows there is still uncertainty around the direction of borrowing costs. So if you're sitting there waiting for the rates to drop, they might not. For buyers, the practical advice is not to try and predict every future rate movement. Speak with a mortgage broker, keep your agreement in principle current, and understand the monthly payment at the price level you are considering. For sellers, buyer affordability matters because it affects both the strength of offers and the likelihood that an agreed sale will progress successfully. When we assess an offer, the headline figure is only one part of it. We also need to understand the buyer's deposit, mortgage position, chain, and whether their borrowing has been checked recently. A slightly higher offer from a poorly prepared buyer is not automatically stronger than a well-supported offer from someone ready to proceed. A high nightly rate on a holiday letting website does not automatically mean serviced accommodation will produce a better return than a standard tenancy. The figure that matters is not the advertised nightly rate. It's the realistic annual profit after occupancy, cleaning, utilities, platform fees, management, maintenance, furnishing, and licenses. Ayr, Prestwick and Troon can all attract demand for short stays. There's tourism, golf, coastal travel, events, visiting families, and contractor demand. But that doesn't make every property suitable for serviced accommodation. A traditional tenancy normally offers more predictable income, fewer changeovers, and less intensive management structure. Serviced accommodation may produce greater gross revenue where the location and the property are right, but the income can be seasonal. And the operation requires more active involvement. The right route depends on the property, local demand, and the owner's objectives. Is the priority a predictable income? Is the owner comfortable with seasonal variation in the income? Would the property attract business travellers, tourists, contractors? Is the likely additional revenue enough to justify the extra costs and workload that are involved? And does the property have a realistic route through the licensing process? That comparison should be done using sensible occupancy and cost assumptions, not the most optimistic nightly rate found online. If I had to summarise June's property market in one sentence, it would be this. Ayr offered speed, Prestwick showed improving momentum, and Troon offered scarcity. But none of the three markets guaranteed an easy sale. Looking ahead through the rest of the summer, I would expect available stock to remain relatively limited across all three areas. Prestwick may continue to strengthen if agreed sales remain close to the number of new listings. Troon's supply could tighten further if more properties continue to sell than come onto the market. And in Ayr, the key question is whether agreed sales numbers recover while selling times remain relatively low. For sellers, the opportunity is there, but the property still needs to be launched properly. For buyers, preparation remains important, particularly when the right home appears within the low stock part of the market. And for landlords, the decision between selling, standard letting and serviced accommodation should be based on the individual property and the realistic net returns. You can read the complete Ayr, Prestwick and Troon property market update on the BE Listed website. If you're considering selling, letting or investing across Ayrshire, you're welcome to get in touch for an honest discussion about your property and the options available. Remember, we can discuss selling, letting, investment in terms of short-term lets as well. Subscribe to the channel to receive the next Ayr, Prestwick and Troon update. I'm Brian McLemon. I'll see you in the next video.